Everybody talks about high interest rates, affordability, bidding wars, and inventory shortages, but almost no one talks about what could quietly become one of the biggest problems in Ontario real estate over the next few years, and that's mortgage fraud, starting to creep back into the market in a completely different form than what people are used to hearing about. I thought this was something the industry had mostly cleaned up after everything that happened over the past several years. I figured lenders became stricter, regulators cracked down harder, and people became more cautious. But lately, I've been seeing things in Southern Ontario that simply don't add up at times. And I'm not talking about downtown Toronto condos or $1 million GTA bidding wars. I'm talking about areas much closer to home, like Windsor, Chatham, Essex County, and surrounding markets, where pricing is usually a little easier to understand. Once I started noticing the pattern, though I realized this could become a much bigger issue than most people think. Recently, I was reviewing comparable sales on a property in the Windsor-Essex area, and at first, everything looked completely normal. The homes were all relatively similar in size and condition, layout, age, and location. Most of them were selling within a pretty predictable range. Then, suddenly, one property sells for almost $200,000 more than the others. Not 20,000, not 50,000. I'm talking about a number so far above the rest that it completely threw off the data. The strange part was there wasn't really anything special about the property that justified the jump. It wasn't fully renovated top to bottom. It didn't have some massive addition. It wasn't sitting on extra land, and it didn't have unique features that made it stand out from every other comparable home nearby. Naturally, that immediately raised questions because when one property suddenly sells way above the market, it doesn't just affect that one deal. It starts influencing buyer expectations, seller expectations, appraisals, and future listing prices throughout the area. Traditionally, when people heard the term mortgage fraud, they usually thought about fake income documents or inflated employment information. Maybe someone exaggerated how much they earned. Maybe paperwork was adjusted to make a buyer look stronger financially, or maybe debt obligations conveniently disappeared on paper. Sometimes buyers didn't even fully understand what was happening behind the scenes. They just knew they somehow qualified for a larger mortgage than they expected. The problem with that kind of fraud is that over time, it artificially pushes housing prices higher because buyers gain access to money they realistically should never have been approved for in the first place. And while most people assume those situations were rare, the reality is they were probably more common than many realized during the peak of the market. What's starting to appear now is much more subtle and much harder for the average person to catch. Instead of fake pay stubs or manipulated income documents, the newer version often revolves around hidden cashback incentives and side agreements connected to real estate transactions. For example, a property gets listed at a certain price and somebody submits a very strong offer, sometimes even above asking price, but somewhere outside the main agreement, there may be another arrangement involving a large cashback payment or buyer incentive after the deal closes. Sometimes it gets labeled as a renovation credit, decorating allowance, repair reimbursement, or something vague that sounds harmless on the surface. The issue is these amounts can sometimes be massive, and if the lender is unaware of those agreements, it completely changes the true financial structure of the deal. Once money starts changing hands outside of what the lender believes is happening, that creates serious problems very quickly. The scary part is that even if you personally never commit fraud, you can still become affected by it as a normal buyer or seller. Once one inflated transaction closes, that sale becomes part of the comparable sales history for the area. Now, imagine you're shopping for a home around Windsor or Chatham, and most similar properties are realistically worth around $700,000. Then suddenly one appears to sell for $900,000. Buyers begin thinking maybe the market is heating up again, maybe prices are rising faster than expected, or maybe they need to stretch their budget before they get priced out. Sellers start anchoring their expectations to that inflated number, and future listings slowly begin creeping higher as a result. The problem is if that original transaction wasn't truly reflective of legitimate market value, now everybody else is making decisions based on distorted information. In markets like Windsor-Essex and Chatham-Kent, one unusual sale can influence pricing far more than people realize because there are fewer comparable sales than larger markets like Toronto. It only takes one or two abnormal transactions to start shifting expectations throughout an entire neighborhood. That can affect appraisals, future listings, buyer psychology, and ultimately affordability for people trying to enter the market. What concerns me the most is how quietly all of this can happen. Most buyers never see these side agreements behind a transaction. Most sellers don't fully understand the structure, every detail in the deal. And the average person simply assumes that if the property sold at a certain number, that must now represent market value. Meanwhile, the reality underneath the transaction may tell a completely different story. By the time regulators begin noticing patterns or investigating certain activity, the pricing damage may already be done because inflated sales have already started influencing future transactions. This is where you can protect yourself. If you're buying a home right now, this is why it's important not to blindly trust the highest comparable sale in the area. Not every transaction deserves the same level of weight when evaluating market value. Sometimes the highest sale or most recent sale is actually the least reliable data point available. This is also why working with professionals who truly understand how to analyze comparable sales matters more than ever. If you're selling, it's important to be cautious with offers involving unusually large credits, reimbursements, or complicated side agreements that don't seem necessary. The moment lenders are no longer fully aware of the true structure of a deal, things can enter dangerous territory very quickly. At the end of the day, mortgage fraud doesn't just hurt lenders or banks. It affects buyers, sellers, property values, affordability, and overall confidence in the housing market. The most concerning part is that a lot of this happens quietly in the background without dramatic headlines or obvious warning signs. It's just distorted numbers slowly making their way into the market and influencing future decisions. I know this may seem extreme, but the consumer needs to know. This is Rasha Ingrata, Mortgage Agent Level 2 with Mortgage Intelligence here in Windsor, Ontario since 1999. Thank you for watching.